Good evening. I hope you all had a great Tuesday. Today the market closed higher for the third day in a row. The Nasdaq gained 0.35%, while the S&P 500 gained a slightly better 0.36%, and the Dow gained the best 0.62%, as talks regarding fiscal stimulus continued and McConnell seemed eager to reach a deal soon. Home prices rose by 4.9% on an annual basis in June, which was nearly a 1% jump since the month of May. The rise in prices were driven by the rise in demand due to the fall in mortgage rates, which started the month off at 3.24% and ended at 2.94% for a 30-year fixed mortgage. Economists warned that prices may fall due to a rise in coronavirus cases across the country, but this effect will be fairly regional. Variables that will dictate house prices moving forward include, but are not limited to, the path of the virus, a potential vaccine, supply and demand moving forward, and other fundamental drivers of housing prices, such as material costs. Paychex's CEO warned that small business employment is beginning to fall again, as small businesses become hurt by the shutdowns. Paychex, which is a payroll processing and HR solutions company, released its monthly Small Business Employment Watch with IHS Markit. The Paychex IHS report for July showed a month-over-month drop of 0.24% and a decline of 3.65% from a year earlier. The company's CEO said, quote, "We saw the July jobs index drop. That puts us back to about April. So we're flat over the last 3 months," end quote. States in the South and the West saw the biggest drop, as the virus surged in those areas through July. Consumer demand is assumed to have increased, though, as hours worked were up about 9% on an annual basis. The CEO called for an extension of the Paycheck Protection Program, saying, quote, "Right now, the biggest issue for small businesses is uncertainty. There's a lot of uncertainty about PPP loans, the flexibility of how they use those loan funds, and when they pay it back," end quote. He also added, quote, "They're not at a point where they can survive without the loans," end quote. He also noted that small businesses are being hurt by the broken supply chains, which hinder the business's ability to even meet demand. Lastly, the company noted that new business startups are up almost 10%. IHS Markit and JPMorgan released their third quarter GDP estimates, which came in at a gain of 20.1% and 21.3% respectively on an annual basis. The estimates, though, are obviously quite preliminary, but anything close to that would handily beat the previous post-World War II record of a gain of 16.7% in 1950. These projections would not be close enough to make up for the lost GDP from the first and second quarters of the year, though. Even with a big bounce, the economy would still be down nearly 3 years' worth of gains. Yesterday, the Treasury Department announced that they expect to borrow an additional $2 trillion during the second half of the year, as the country continues to fight the virus and work to provide more fiscal stimulus. For the third quarter, they expect to borrow $947 billion and $1.22 trillion for the fourth quarter, bringing the total for fiscal year 2020 to $4.5 trillion, which happens to be in line with estimates. Although the dollar has been very weak recently, presumably due to the large printing of money by the Fed and fears of the dollar losing its status as the world's currency, the Fed remained as the world's backup lender. During 2 critical mid-March weeks, it bought a record $450 billion in treasuries from investors desperate to raise dollars. By April, the Fed had lent another nearly $500 billion to counterparts overseas, representing most of the emergency lending it had extended to fight the coronavirus at the time. This established the Fed as a global guarantor of dollar funding, cementing the U.S. currency's role as the global financial system's underpinning. Oil and gas blew out every other sector today, as it gained more than 2.3%. Basic materials, consumer services, telecommunications, and utilities all had good days of their own, though, as they all gained close to or more than 1.1%. Healthcare ended the day down nearly 1.1%, and tech had a little sell-off. The table shows us that all baskets of stocks rose today. Large cap value performed the best as they gained 0.82% on average, and small cap growth had a good day as it gained 0.69%. The best day in the S&P 500 came from the Mosaic Company, which is a fertilizer company. Shares rose 13.6% as the company posted great earnings this morning. They beat non-GAAP EPS by a large 12 cents, as they were actually expected to lose a cent per share, but came out with a gain of 11 cents per share. Revenue was down 6.4% on a yearly basis, but they still had revenue of $2.04 billion, which managed to top estimates by a large $200 million. The company had a record volume of potash sales due to India and Brazil fertilizer sales experiencing strong growth on an annual basis. Shares of semiconductor company AMD continued their surge today, as shares gained 9.49%. This move comes after the company was upgraded by Jefferies, who applied a price target of $95, which was previously set at $86. Shares of utility company Evergy had the worst day as they fell 11.61%. This sell-off was due to news stating that the company is deciding to remain independent after reaching out to companies regarding a potential sale. Shares of finance and insurance company American International Group fell 7.53% after the company reported earnings yesterday. They beat on non-GAAP earnings but completely missed GAAP earnings due to a finalized sale of a unit that generated a large accounting loss. On top of this, they posted a 56% fall in quarterly adjusted earnings, spurred partly by higher catastrophe losses and lower private equity returns. Getting into earnings, we'll start off with Walt Disney Company, ticker symbol DIS, which is the mass media and entertainment conglomerate. The company had mixed earnings this afternoon. They beat non-GAAP EPS by a large 75 cents, as they managed to scrape out a gain of 8 cents per share. Revenue was down a horrible 41.8% on a yearly basis, as they had revenue of $11.78 billion, which was lower than estimates by $580 million. Disney did manage to produce subscriber growth for their services Disney Plus and ESPN Plus, but they ultimately came in below estimates. Shares are in the green after their earnings. Next up, we have Beyond Meat, ticker symbol BYND, which is a producer of plant-based meat products. This afternoon's earnings were positive. Non-GAAP EPS came in line with estimates at a loss of 2 cents per share. However, they did miss GAAP EPS by a wide margin. Revenue grew by 68.5% on a yearly basis, which was fairly expected as they finished revenue for the quarter at $113.34 million and beat estimates by $13.99 million. Notably, net income was a positive $2.3 million versus a loss of $76.6 million a year ago. Grocery sales nearly tripled, which managed to offset their lack of revenue from the restaurant segment. Shares are currently deep in the red during after-hours trading. Next up, we have Activision Blizzard, ticker symbol ATVI, which is a video game producer known for their games such as Call of Duty, Overwatch, and Candy Crush. The company posted fantastic earnings this afternoon. Non-GAAP EPS beat estimates by 28 cents, as they had a gain of 97 cents per share. Revenue grew by an astounding 71.9% on a yearly basis, as they recorded revenue of $2.08 billion, blowing away estimates by $380 million. Ultimately, investors wanted more, and shares are in negative territory after hours. Next up, we have Wynn Resorts, ticker symbol WYNN, which is an owner and operator of high-end hotels, resorts, and casinos in Las Vegas, Macau, and Boston. Wynn had dismal earnings this afternoon. They missed non-GAAP EPS estimates by a whole $1.23, as they recorded a loss of $6.14 per share. Revenue was down a horrid and nightmarish 94.8% on a yearly basis. Revenue was down a horrid and nightmarish 94.8% on a yearly basis, as their revenue totaled $85.7 million for the quarter, missing estimates by a huge $190.12 million. Currently, shares are trading higher by more than 1%. Lastly, we have Match Group, ticker symbol MTCH, which is a technology company that owns dating services such as Tinder, Match.com, and OkCupid. This afternoon's earnings were pretty positive. The dating company beat non-GAAP EPS by 7 cents, as they had a gain of 51 cents per share for the quarter. Revenue totaled $555 million, which represents growth of 11.5% on a yearly basis, and beat estimates by $21.25 million. Shares were up 1.5% after the earnings report. That is all that I have for tonight. Enjoy the rest of your evening, and I plan to see you all again tomorrow.